Hey guys,
Hi.
how's it going?
Good.
Good.
Bank of Canada announcement yesterday.
Yeah, it's exciting. I mean, some people might not find it exciting, but it's exciting.
Why are you excited?
Well, because it's kind of like, slowing down the horses, right?
It's like the first time that we were expecting more of a rate hike and we
Yeah.
got less.
yeah,
First time this year anyway.
yeah. So that's exciting. Before we get into that, though, can I ask why you were not dressed up as a Tyrannosaurus Rex?
Oh, are you wearing some type of Halloween costume?
Yeah,
What is it?
I'm vacation, Justin.
Oh, no way.
Yeah,
Ah.
yeah,
It's not Halloween today.
right.
So there's one reason why I'm not dressed up as a Tyrannosaurus Rex.
So the Bank of Canada interest rate hikes, slowing down. Good news. Tell us more.
Okay, so I don't know. It's temporarily good news. It
Right.
kind of the Bank of Canada was widely expected to increase the overnight rate by 75 basis points,
right,
which would take the overnight rate to 4%. Instead, they increased it by 50 basis points and they took it to 375.
Mhm.
Overnight rate, of course, is not the prime rate, although 375 would be a great prime rate.
Yeah. No, 100%.
Prime rate is now 595.
Right.
So we got a 6% prime rate. The reason why I kind of we both were, we did like a virtual high five when that came out was it does signal that the Bank of Canada sees that something is happening in their fight against inflation.
Right.
We speak about this all the time. So in order for them to see a reduction in these inflationary pressures, they're going to need to affect change on the economy negatively, right? So they're increasing the borrowing costs in the hopes that they can slow down the consumer, slow down businesses, slow down employment, because there is not enough capacity in our economy. There's too many people working. There aren't enough people unemployed,
Right.
looking for work, and they want to increase that. It is sad.
Yeah.
So we've spoken about this at length. I don't see a way that you get rid of this extremely high inflation without creating a recession, right? And they keep talking about it, and it was mentioned again, it was alluded to in this most recent monetary policy press briefing. And they're addressing it, but they're also saying that, the reason for 50 basis points is this was the kind of measured approach that we needed in this meeting. And although we aren't finished increasing interest rates yet, it does appear that most of our work has been done.
Amazing.
That's good news.
Yeah.
Um,
Can I ask you a quick question before we go on?
yeah, of course.
Just out of curiosity, because this is something that popped into my head. If slowing down the economy equals more people out of work, that would then equal more, I'm assuming, more social assistance and stuff like that. Like, how is that good for the economy?
It's not.
Right.
It's not good for the economy.
Right.
What is good for the economy is to have people looking for work, though.
Right.
And never mind, you're talking about a government's use of money. You don't hear about this much in the news, but the amount of the tax revenue that the government of Canada collects, the percentage of that will now be going to service debt, is the same as you sitting at home thinking to yourself like, geez, how much more is it going to cost me to service my mortgage?
Right.
So now, if you think about it, the government of Canada has the same issue. They've got a fixed amount of capital that they're bringing in every year as their revenue from the taxes they collect.
Mm-hmm.
But they've got an increasing amount that they need to spend to service their debt load.
Right.
So that will typically that creates a need for a budget rebalancing to cut back on some of the other expenditures.
Right.
Read social assistance.
Right.
Or increase tax revenue, which is obviously what's going to happen.
Right.
Listen, to get back to the Bank of Canada, 50 basis points was cool. It was good to see. Mm-hmm. I'm sure it was a welcome reprieve for a lot of people.
Mm-hmm.
They specifically talk about housing,
mm-hmm.
And how much more difficult it's becoming for people to service their debt,
mm-hmm.
which is good. I mean, listen, they're aware of it. It's the lesser of two evils, right? If you
Right.
could get rid of inflation and create high unemployment and a recession, you take it. And that's what they're doing right now.
Right.
There's a few themes, right? Like that kind of keep rattling around in my head. Number one is the measurements that we're taking to look at these inflationary readings are lagging. They're not leading. Like these are what happened. They're not what is happening.
Right.
And certain effects of raising interest rates are not yet quantified. We always say, every central bank or every economist has always discussed that when you move interest rates, the effects of the move are a year in advance,
Right.
a year in the future. So right now you're getting a psychological impact of it. But the reason why it's a year in advance is because and you see it in the real estate market. So the supply demand in Canadian real estate, say the GTA, there's this comment that's being echoed that, hey, there's just not enough supply out there.
Mm-hmm.
No one's listing,
Yeah.
right? There's demand, but there's no supply because people are saying like, geez, property values dropped 10 or 15 points, let's say. Kind of, we can widely agree to that, right?
Mm-hmm.
So property values dropped 10 or 15 points. Well, I'm going to wait. I'm not going to sell my property now. I know it's going to go up.
Mm-hmm.
They're right. On a long enough time horizon, everyone is right.
Mm-hmm.
Right?
Yeah. I like that.
Yeah, I mean, it's not mine. Somebody smart said that. But when you think about it, there are so many kind of fundamentals that it's easy to look at. Remember how I say I always want something to look forward to?
Yeah.
It's easy to look forward 24 months and see a world where housing prices are higher than where they are today, because you can see interest rates will be lower than they are right now. You can see that the demand for housing in Canada is not abating. There are tons of people coming into our country. Like it was a record year in this past 2 quarters, made it a record year.
Right.
So there are fundamentals that, kind of buoy the real estate market. But in the short term, we're in for more pain, right?
Right.
Because the impact of higher interest rates haven't really fully been felt yet.
Right.
There are people sitting in their homes right now thinking to themselves, how much longer can I maintain my debt service payments?
Right.
Like you were talking about your mortgage today.
Yes. Yeah.
You want to expand on that? Or
Yeah.
you want me to just like...
Yeah. No. We had gone. Me and my wife and I had gone into our online account and noticed that our amortization was something like 60 years or something like that, because I'm on a variable rate mortgage. My payment stays the same. My amortization changes. And so, I had to, and when the I knew that our interest rate was going to go up again, I had to increase my payments, right? Just because, and I increased them, significantly, like,
And a lot of people can't do that.
Yeah.
Right. So how many people who are dealing with that don't have the ability to use equity in their home to solve that problem, or maybe aren't inclined to, frankly?
Right.
Or what's their time horizon? Were they planning on selling in the next couple of years anyways? Right.
Right.
Those houses will eventually hit the market.
Right.
Like those people's homes, they will sell them. At a certain point, we will see a spike in supply. The question is, how quickly can that be absorbed, and how can we time that kind of supply hit to the market with a way of increasing demand on the other side, reducing interest rates?
Right.
It's almost like psychologically, interest rates need to drop, and we need to signal that like it's a buy time.
Right.
And hope that we don't impact too many people negatively by stretching them out this long with high rates.
I was on like a website. It's just,
No, we're not talking about that stuff on this show.
What, a website?
The websites you go to?
It's not that kind of website. I was on a website. It's kind of interesting. They give you, I live in a condo building. They give you the average price per square foot over the past year for units that have sold in your building, and mine keeps going up. It's very weird.
Like right now?
Right now, yeah. It just went up again.
Wow.
From like $1,025 to like $1,140. It's pretty crazy. It's weird, right?
I mean, is it because maybe you live there now? Like, has it been a
yeah.
increase
No,
since
because people really want to live in the vicinity of me.
yeah.
Yeah, it does get off. I do give off quite an aura.
Listen, condo prices have not been affected by as much as housing prices in the suburbs.
Right. Yeah. No. Of course.
And I think that's also because they didn't go up. Right? We had 2 years during COVID where remember the new normal?
Yeah.
Honestly, there's got to be a clip of me saying that the new normal is
We
bullshit.
have a clip.
Insert
there
it
is, yeah.
here. In 2009, we recommended a 1 year while the dust settled on those variables. And at the time, everybody said I was crazy. They were like, you cannot tell people to take a 1 year fixed rate mortgage in this environment. Everybody should be locking into something. Rates are going to go up. Variable rates are never going to go back to being prime -1. This is the new normal. Does that sound familiar? New normal. I'm going to let everybody in on one little secret here. The new normal is bullshit. There is no new normal. History dictates the future. The people behave the same way. There's no new normal. This is it. So the same thing's going to keep happening in the world. Like, study history. Read a few books. New normal.
Bullshit.
They said it was the new normal in 2009. There wasn't going to be a new variable rate below prime minus or prime +1. It didn't happen. It's back to prime -1. Certain things will always return to where they are. And when they aren't where they should be, bet on them to go back. It's called reversion. Reversion to the mean.
Yeah.
I said the new normal is bullshit.
Yeah.
Guess what? The new normal was
Bullshit.
Yeah. Anyways, so what happens? Everyone moved out to the suburbs and further, thinking that their new life was going to be remote working. Yeah. And condo prices did not go up. They went down in some cases in that 2 year stint.
Yeah.
Well, everybody was moving to the suburbs.
Right.
Now, average home price in those areas is rocketing back to earth, and condos are kind of holding their own.
Right.
The other reason for that, maybe I could presume, is that people are downsizing in this type of a market.
Yeah.
But condos aren't going to be spared.
Mm-hmm.
Like, it's not like we're not going to see a further decline in pricing. We're going to see.
Right.
This is not done yet. The impact of the rate hikes that we have seen have not been felt fully through the economy yet.
Yeah.
Just like when we drop interest rates, it's not going to happen immediately. It's going to take a little bit of time for the consumer to come back into the market.
Right.
50 basis points today. In closing, 50 basis points today. I welcomed it. 50 basis points was welcomed. I was really happy to see it. It was like, in the United States, the markets, the S&P and the NASDAQ and the Dow have had great kind of strength after hitting a low of like 3,600 on the S&P, I think. I don't know exactly.
And your number was 3,800?
No. We called that. We remember that past show, I bought those puts. The problem is I bought more puts. When it started rallying, I bought 3,550 puts on the S&P. And the S&P is now like going to touch 3,900 now. But we'll see. Maybe that's a bear market rally. I got to think that unless we see a meaningful pivot is like this is like the catchword right now, pivot. Unless we see a meaningful pivot by the central bank in the United States, then we should see a little more pain in the market, right? The pivot is all about like the moment that the central bank says we are now going to start reducing rates. We're going to pivot. Yeah, we raised them enough. Now we're going to reduce them. Yeah, that's not happening yet, and it depends on what happens in the next meeting of the Federal Reserve. In Canada, I think we can expect to see another 25 basis points, maybe another 50 basis points by the end of the year. Get ready for it, and it'll depend on what kind of verbiage is in that next meeting. There's so many different kind of schools of thought, right? Like there are some people which I would say I'm kind of maybe more in this camp now, that think we've done too much to increase interest rates already, and that the full impact of it we're not fully quantifying. We don't fully understand just how bad things can get based on how quickly we've raised interest rates. And this is like kind of steering a really big ship, right? So like we just made a massive turn. Like it's surprising the ship didn't roll over.
Right. Yeah. Yeah.
Right.
Yeah.
We were at a 25 basis point overnight rate. We're at a 3.75% overnight rate right now. Everyone's kind of hearkening back to this period of time where Paul Volcker had to solve inflation. But at that time, interest rates rose from 10% to 20%. They doubled.
Right.
Right. Right now, interest rates have rose tenfold.
Right.
Right. More than tenfold.
Mm-hmm.
So it is a very pronounced impact. And the other thing that we know, because we used to listen to Stephen Poloz, our central bank governor, talk about it, is that currently, because there is so much more debt in the market, a smaller increase in the overnight rate creates a more dramatic impact on the economy.
Right.
We threw that out though. We're not even paying attention to that one anymore.
Yeah.
Right? Like, so there's certain things that worry me in us fully not understanding, and us, I mean the central bank, like the Bank of Canada. I think many people have kind of lost the confidence in, oh, they got this.
Right.
Because when we were printing money for to fight COVID, because apparently if you print money and give money to people, it actually stops COVID.
Yeah. Yeah. You didn't know that?
Yeah. Anyways, when we were printing money, the central bank told us that it was okay and that it wouldn't create inflation, and that if it did, it would be a good thing, and that inflation would only be temporary.
Right. Which is not true.
Right. And then now they're telling us it won't cause a recession, that we're increasing interest rates the most we have ever increased them on a percentage basis in the history of our central bank. That's not a problem either.
Right.
So I don't know. What's a problem?
Yeah.
Inflation is obviously a problem.
Yeah.
Anyway, so there's kind of one camp that thinks like maybe we should slow this down. And then there's another camp that says, you know what? Do anything you can to fight inflation. Just hammer it as hard as you can. Let's get rid of that inflation.
Yeah.
The problem is you can't just look like with such a singular, resolute focus when you're dealing with the economy. You know, it's
Your mind has to be everywhere.
it's too complicated.
Yeah.
And I think we may be doing some damage that might last longer than this 2 quarters light recession. Like,
right.
you know, just a little bit of slow growth. I hope that I'm wrong. I hope, and I think that the sooner we pivot, the better off our economy will be. And it has some, there are some good fundamentals, like 24, 36 months out, that, you know, give me confidence. I would just hate to see, like, this is what I hate, right? People were being told that the new normal was that they could work from home.
Right.
So they went and bought a house in
Leamington.
In Leamington.
Clarington.
Leamington. Leamington sounds good. That is like near Windsor?
No clue.
Okay. So people bought a house in Leamington.
Yeah.
And they spent a lot on that house.
Yeah.
Right? Because the market was hot and everybody was moving to Leamington and surrounding areas. And whatever. Hopefully it's on the 407. Matt, can you see if it's on the 407?
Yeah.
And they could take the 407 or the 400. Or not the 400.
That adds to their bills.
Yeah, but whatever. They're getting in and out quicker if they had to go anywhere. But they don't even have to go to work anymore because guess what? They got a home office. And then things change again. And people want to be around people. Go figure. They want to be in condos. They want to be going out. They want to be hanging out at the office.
Yeah.
People are social.
Yeah.
That didn't change.
Yeah. So
they start going back, and they need to sell those properties. But a lot of them need to sell them. And now these people who put 5%, 10% down, all the money they had to buy some property for $500,000 are sitting there and they're like, I can't sell this thing right now. It's worth $400,000. Right? Because if the average median price has dropped by 10, some areas have seen more dramatic drops in pricing. So executing on a sale right now, if you're absolutely, you know, forced to, you got to do it. But it can be really, like, it can be very difficult on families right now.
Yeah.
And that uncertainty is not going away. we got a little glimpse of what it's going to look like when it does go away from the governor of our central bank, Tiff.
Mm-hmm.
But we did not get the pivot that we need in order to kind of shore up our real estate market. And I don't think we're going to get it for a little bit. I think it's going to be another 6 months before we get that pivot.
Right. I was reading, I don't know where it was, BlogTO, one of these guys, but I was reading an article about this girl who did this whole new normal thing, and now she has to go to work 3 days a week, and it takes her, I don't know, 3 hours, 4 hours to get to work, and it's terrible. I feel bad. Also, I was reading another article. Have you ever spent $6,000 on a hotel room in one night? You probably have.
Yeah, I have. This is a great hotel room, though.
Yeah?
Actually, I don't know if it was $6,000.
That's a lot of money.
Yeah, no.
That's a lot of money. Apparently, Justin Trudeau, not that we have any sort of political agenda here.
Yeah.
But Justin Trudeau spent $6,000 on a hotel room one night.
The question should be, have you ever spent $6,000 of your money?
Yeah.
Like, he didn't even use his own money.
Yeah.
For
Have you
right?
spent $6,000 of everybody else's money?
Yeah,
on a hotel
no,
room?
I spent my own damn money, and it wasn't $6,000.
That's so much money.
Yeah, it's a lot. But the pound.
Yeah, that's true. Oh yeah, it was in the UK.
Yeah, but still, the pound is like at par with the US dollar now.
Yeah, it's not that bad.
Yeah, it was, and at the time, it probably wasn't.
Yeah, I'm going there soon, so hopefully it continues to take a dive. No, that's not true. I don't actually hope that.
I was just there yesterday.
How was it?
Yeah, it was great. It's great. It's so great. London is a great city.
Yeah, I'm excited.
There's always so much going on.
I could see you getting one of those jobs where you wear the big hats.
That's what I was doing when I was there.
What?
It's like standing in front of the queen, the beef eaters. With
Yeah.
That's what I was doing.
Like on the gin bottle.
Yeah, that was me.
Yeah.
That's where you know the hat's from, the gin bottle. Eh?
Yeah, well,
that is, yeah. Well, the gin's called beef eater, right?
beef eater gin. Yeah.
Why do they call them beef eaters? Maybe Matt can get us that answer by the end of the show.
Let's not hold our breaths. No, he'll figure it out. Yeah.
Leamington is just southeast of Windsor.
Oh, nice.
Yeah. Boom.
Nice. Is it on the 407? No.
No. It's the other way.
Yeah.
West of us.
401.
But a great west. Yeah. Sarnia, London, out that way.
What am I looking up now?
Leamington's great, actually. Leamington is like the breadbasket of Ontario. Gets a lot of sunshine, a lot of greenhouses out there,
Nice.
a lot of tomatoes. If you're eating a tomato or a cucumber in southwestern Ontario,
You better bet.
you better believe it's coming from Leamington. Yeah.
The other question was what are the term beef eater come from?
Oh, yes.
Yeah. Okay. Should we ask a question?
Sure.
Okay, hold on.
Oh, yeah.
I'm having a really good time today.
Oh, good.
Like we're having a lot of
You know what?
laughs.
50-50 is not bad.
50-50.
Yeah, 50% of us are having a good time.
Yeah. He's having a good time. You can tell.
Who, Matt?
No.
Me.
You.
I'm
Yeah.
having a
I was
good
going to say one third.
Just me having a good time. Everybody else hates it.
1/3 would imply that we actually count Matt,
Right.
which I don't think that we do.
I can tell you right now, he's not on screen right now, but he doesn't have a green shirt yet. And I need
You were supposed
change
to get the
that.
green
I know.
shirt.
Because they were the king's guard and they were permitted to eat as much beef as they wanted from the king's table.
Oh, that was probably good beef too.
Mm-hmm.
You know what I mean?
Yeah, at the cow store.
Yeah, from the cow store. All right, I got a question here. Hey guys, my mortgage is coming up for renewal in about a month, and I'm unsure of what to do. I've been in a variable rate, but now that payments or rates have gone up, my monthly payment has been increasing, and I've really taken a hit financially. Very common right now.
Yeah, welcome to the club.
Yeah. What do you suggest I do when it comes time for renewal? Should I continue with a variable rate or should I lock into a fixed? We have this question every time. But I guess the answer would theoretically change as the market changes. But I don't think that it changed.
I think you got to stay variable.
Yeah.
I think you got to stay variable. I think based on yesterday's, I think it's okay. I think based on yesterday's Bank of Canada policy announcement,
Yeah.
we know we got another 50 basis points in the cards. I think you take a 5-year fixed rate right now, you are going to be locked in that sucker for a while.
Yeah.
I think that if you want, you can take a shorter term That being said, I had a good quote the other day. I don't know who was saying it, but like
Me?
probably not. But it was just like, if you're a first-time home buyer entering into this market and you've got so much uncertainty already and you want to fix your mortgage rate, do it.
Mm-hmm.
Might not be the best,
Mm-hmm.
but at least you know exactly what you were spending every month,
Yeah.
which you're not going to get from something else.
Yeah.
But I would really say variable rate right now. I think that most of the pain of these rate increases we've gone through.
Mm-hmm.
So if you can weather the payment and budget for another 50, I mean, listen, if we saw 100 basis point further increase by the Bank of Canada, I mean, that means that like the economy will,
Devastation.
not devastation, but it's we still don't know. I'm gonna have to repeat this. We still don't know the full impact of what we have done already to our economy.
Right.
It is so great that we can just flippantly talk about it, right? Like now, like Chrystia Freeland, our Minister of Finance, Trudeau, Mark Carney, the former governor of our central bank, who actually went to England, was the governor of their central bank, and now has come back. We're seeing more and more of these bureaucrats coming into Senate or speaking out into the public and saying like, oh, Canada might be in for a little bit of pain, but it'll be okay. We're going to be in for a little bit of pain, a little bit of issue with unemployment, a little bit. Nobody know. They don't know how much pain we're going to be in for, right?
Yeah.
There are a lot of people right now that are struggling to make ends meet. And we just increased rates another 50 basis points. There are a lot of people who this is like, you're playing with people's lives, right? Like this is like somebody bought a house because you were encouraging them to buy property. They've bought a house now. The amount of equity that they thought they had in that house has disappeared because you were telling them that interest rates weren't going to rise, and now they are rising. So like, let's be real with Canadians, right? Like, let's be real with people that we're going to be in for pain because we made a mistake. We printed too much money and we patted ourselves on the back. We printed too much money. We handed it out to everybody. We spent it on nonsense. And now we created problems with the supply chain because we weren't letting anybody spend money either, right? We had everybody locked up.
Right.
And then we said, okay, everyone, you're released now. You're allowed to fly without a mask on now.
For now.
Because now it's different. You're allowed. Go back out into the world and be this the way you were. And people were like caged animals. They wanted to buy 2 of everything and they wanted to fly to 2 sun destinations simultaneously. How are you going to go to Cozumel and Havana on the same day, Justin? Don't worry, I'll figure it out. I've been stuck in my house for the last 2 years in Leamington. I remember telling people, do you really want to spend a lot of money on a vacation right now? Because everywhere you're going to go is going to be packed. Every hotel is going to be the maximum price it's ever been. Every airline is going to be as busy as they've ever been. Lucky for me, I did a lot of my traveling during COVID.
Yeah.
But you can't tell people, like, if somebody has saved up their kind of mental space and their money and they said, you know what, the moment Justin Trudeau tells me I can go to Cozumel, I'm going to Cozumel. You're going to go to that guy before he boards the flight or before he buys a ticket and say, like, next year Cozumel's going to be a lot cheaper because we're going to be in a recession. Heck no. He's going to Cozumel.
Yeah.
So all that money got spent into the economy. People thought that they were safe and secure and they were being protected. But guess what? You're not being protected. No one is protecting you. You got to protect yourself. Okay? Interest rates are rising. The Bank of Canada is doing that to protect inflation and to protect you from being even more upset with your government. But we created a problem. They're trying to solve a problem. But usually they create another problem. Usually. Hopefully that doesn't happen now.
Right. Yeah.
But it could be happening. We could be just creating the next problem.
Right. I hope not. I feel like we need a break from problems.
Listen, since 2008, we've taken a break from problems.
Right. Yeah.
2008, The United States saw a massive drop in real estate prices because of the subprime mortgage crisis. Canada saw like a meh. And then we just printed a bunch of money and we just kept going. We just papered over all of it in money. Governments did buybacks. We had quantitative easing. Interest rates went super low. The economy got kickstarted. Shoom. And then before COVID, we started feeling some bumps in the road. But then COVID happened and initially we were like, uh-oh, this is going to be bad. And then we realized, oh my God, no, it's actually way better because we don't have to go to work anymore. The government's just going to write checks to everybody to stay home.
Yeah.
And they're telling us it's not going to cause inflation. So this is perfect. Guess what? Not perfect.
Not perfect.
So now we are paying for it.
Yeah.
And hopefully the medicine that we're taking now, which doesn't taste very good, we don't have to be on that many cycles of it.
Right. Yes. Yeah. It's one and done.
Yeah.
Hopefully.
Yeah.
Sorry, just a quick
Like, know a lot about antibiotics.
Yeah. Where's Cosmonaut? Cozumel?
Mexico.
Or Mexico. I just booked a flight to Mexico.
Really?
Yeah, not Cosmonaut.
Cosmonaut is the Russian guy sitting at home outside of Vladivostok now because he's been taken back from the International Space Station because Russia no longer cooperate with the USA.
How's that going, by the way?
Oh, super good.
Yeah. That was sarcasm. We need a sarcasm.
How's that going? How's the Ukraine going? I don't know. Do you live on planet Earth? First of all,
I love how Justin just tunes in like it's a sports game. Like, how's Ukraine or Russia winning?
First of all,
I know it's not going well. I'm just to be clear.
Yeah, this is okay. This is a bit of an
I think that's the next medicine that I'm scared of.
A nuclear bomb?
Yeah, pretty much.
Yeah.
You know what I mean? Like North Korea is doing drills.
Don't worry about North Korea.
China and Russia are best buds. It's a problem. It's a problem.
Yeah. I mean, listen, you understand this whole Ukraine issue, right? Very basic.
I'm going to say yes, and then you're going to explain it.
Very on a very basic level.
Yeah.
It was understood in the time of Gorbachev, okay, the leader of the USSR.
Yeah.
In order to come together with the United States, they wanted to create on the borders of the USSR, Russia. They wanted to create states, countries that were socially democratic. It was an experiment. And the United States said, listen, let's agree that this area where the Ukraine is, we're not going to put anything there. It's not going to become a NATO member. It won't threaten your borders. And we'll work together and we'll keep this space kind of like a free zone. And they agreed to it. And then over successive terms of new presidents in the United States, the United States began changing the way they viewed the Ukraine. And those changes were interpreted as threats by Russia.
Right.
And I mean, this, first of all, it is not excusable for anybody, Russia, the United States, any country, to go in and invade another country.
No, yeah.
And that's what Putin did.
Right.
He went in and he invaded another country, and people are dying because of it. Bad guy.
100%.
Right. He's doing it as a response to an agreement that the United States went back on, seeing it as a threat to his country. He's doing it as a defense mechanism. The same way that the United States did it as a defense mechanism when they went into Iraq.
Right.
Weapons of mass destruction. Right? If we can't get around a table, and I mean not me and you, we would be happy to do that.
Yeah, I love that.
But if these leaders, if they, if we can't create some type of meaningful dialogue, the stakes of the game are too punishing. The result of a miscue right now. You have leaders of nuclear countries lobbing back and forth the word nuclear on a daily basis right now, right? Like Liz Truss. Do you know who that is?
Yeah,
She had a cup of coffee, half a cup of coffee, as the Prime Minister of the United Kingdom.
Yeah. 45 days, right?
Of Great Britain. Yeah, she
45
was.
days.
Yeah, she's a.
I think
Anyways,
45 days.
in the 45 days, she managed to say that she would be not against using a nuclear weapon. She wouldn't be scared to use a nuclear weapon.
Right.
Putin's talking about dirty bombs. The Ukraine's talking about dirty bombs. Joe Biden asked this morning, where was he? He's like, where am I? No, just kidding.
I wouldn't be surprised.
Yeah, no, but Joe Biden's like, he's like, there'll be really swift, decisive action should something happen like this. Listen, threat level is there right now.
Right.
You're right. It's weird. It's a very weird time. But the whole Russia-Ukraine thing, it's like, it's difficult. I mean, listen, he invaded a country.
Yeah.
Bad guy.
Yeah.
But the United States is not without blame in how they've been using the Ukraine to provocate Russia.
Right.
Bad response, but probably the response they were anticipating.
Right.
And then you want to go down a rabbit hole? What does that say about who's pulling the strings in the United States continuously over a Democratic president, a Republican president, Democratic president, Republican president? Like there's been shift changes. But the one resolute focus is that the might of defense spending is always there.
Oh, yeah.
Right? Let's go and invade them. Let's go and create a need for some more weapons.
Right.
That's always there. So a long, slow war is extremely profitable for defense contractors, right?
Right.
It's just at the end, if something happens, what are the defense contractors going to do? Oops, we were just looking out for our shareholders.
Right.
It's scary, very scary times.
I feel like we should be smoking a joint right now. Like I'm like locked in. You know what I mean?
Really,
like,
eh?
Yeah, like one of those like when you know what I mean? One of those. Locked in. Scary.
Yeah, just like
scary.
the coordinates of the nuclear missile heading for.
What?
Well, that's what you do, right? You lock in.
Oh,
the
locked in. Yeah.
Yeah.
Locked in.
Yeah. No, it's very, very strange times. Listen, what we can say is the Bank of Canada increased rates by 50 basis points, not 75.
Yeah.
And if the
victory.
If the war ends, which, like, you gotta think that the winter time, something's gotta give by winter time. You gotta hope, not only just for like these poor people that live in the Ukraine that can't heat their homes.
Yeah. It's not a warm country.
No. But also for Europe,
Right.
that is going to have a serious gas problem. Right?
Yeah.
Much like you have to eat burritos.
Taco Bell. Let's get into another question. Hey, Justin and Marcus, as you know, the holidays are coming, and I was hoping to eliminate some of my credit card debt and access some additional funds for the future. I currently have a $500,000 first mortgage with my bank, and I think my house is worth about $850,000. I'm looking for something that has a low monthly payment and doesn't and won't overwhelm me, as well as a rate low enough so that it is worth using to pay off my debt. What are my options?
Okay. If they qualify, maybe a line of credit in second position.
Right.
Depending on what that first mortgage is. I didn't hear whether it was variable or fixed.
They didn't tell us.
Yeah. So, I mean, if the first mortgage is fixed, probably makes a lot of sense to look at something variable in second position, like a home equity line of credit. The problem is a home equity line of credit is going to be priced at prime or prime plus a half. So, and you could get a variable rate mortgage right now at prime minus 180 basis points, somewhere in there.
Okay.
I don't know, 50 basis
you
points
can,
uninsured.
but just
Yeah.
not to pull out equity.
Yeah. Okay. Fine.
Prime minus 65 for an uninsurable mortgage. Prime minus 65 and prime minus 70.
Okay.
So very close.
She said her property is worth $850.
850, yeah.
So what is it? 600 and $680 is the maximum loan amount to bring her to 80% LTV.
Sure.
It's $180,000 that she can access in equity, which is probably way more than what she needs.
Yeah.
Again, you just like you can play that weighted average cost of capital game here, right?
Mhm.
Where you say, okay, I need $50,000. $50,000, I can get a line of credit at prime. Prime plus a half. That's probably the way to go for this.
Mhm.
And then the other thing I would say is like figure out how much money you really need to take out.
Mhm.
Get it approved on your line of credit, but be aware that that line of credit should be like sparingly used.
Right.
Like,
yeah,
do me
yeah.
a favor. Don't use the line of credit to go for dinner. Like,
Mhm.
unless it's like your anniversary or your significant other's birthday or something. You
Yeah.
really, really got to do it. And then like,
Don't
Yeah.
stay where Justin Trudeau stayed. Just for
don't
fun.
say right where the Savoy. Like, where did he stay?
I don't know. I don't even know.
Somewhere good.
You're jealous.
You know, I stayed at the Nobu Hotel when I was there.
Oh yeah. Like, isn't that like
I have no idea where it is.
what?
You know where it
I
is?
don't know where it is.
Just open.
No. Hold on. Isn't it? Isn't it
Sushi.
like no? But isn't there? Who's the guy who talks like this? Robert De Niro.
Yeah. Oh my
See?
God. Totally right. Yeah.
You said
So-
I didn't know, but I know
Nobu is the sushi chef, partnered with,
Robert De Niro.
I guess, amongst others, created this awesome hotel brand.
Right.
Very coolly, very well designed.
They're opening one right on King Street.
Correct, with condos.
Yeah.
Anyways, I stayed at the hotel. It was really cool. It had a great gym.
Mm-hmm.
It had like a Pilates studio in the gym.
Mm-hmm.
I could not get in to do a Pilates class because it was booked every single time. So I just I worked out at the gym, which was great. Problem with the hotel, no steam room.
That is a really big problem.
I need a steam room.
Yeah.
Yeah, I'm not. And how do you get 5 stars if you don't have a sauna or a steam room?
Yeah. You know what I do want, and I wish they would add to the gym that we go to, which I've at Good Life. They have like a cold room where you go in and it's like 0 degrees in there. So you go in and then you sauna, cold room.
Yeah, that's great.
Yeah.
You know what? I would need that even like in the wintertime because I get out of that steam room and I put my clothes on and I just sweat
Sweating.
right through my clothes.
Yeah,
Like,
yeah.
Just I feel like a gross pig.
Yeah.
Well,
We're really getting off track. I say we
cut it.
cut it.
Yeah.
Cut it while we're ahead. Next week, we'll be back here again.
Mhm.
We'll be talking about the same things, except it'll be even more interesting next week, if you can believe
Oh
it.
my God, it's going to be so much more interesting.
Yeah, it's going to be crazy.
And don't forget to click subscribe and like wherever you listen to this podcast because it helps us so much. It really does. More people get to listen to this nonsense. Think of it like this, okay? It's going to be impossible for you to say no, okay? You listen to this podcast or you watch it on YouTube, okay? The moment you hit subscribe, that means more people are going to get to listen to this thing that you like. It's going to help us, which is great. But more people are going to get this great content. Now listen to this. You don't like the show. You realize that we're imbeciles. And you're afraid that you've been wasting your time listening to us. Even though you got to admit our projections have been correct over the last 2 years.
Yes, 100%.
Well, if you think you've been wasting your time, you got to even things up. So get people wasting their time.
So you can get ahead.
Well, because you're behind now. Because
Yeah.
you wasted how much time listening to these podcasts?
Yeah.
Well, solution, hit like, make other people waste their time on it.
So you
So-
can get ahead.
Technically speaking, this is a win-win situation. You like the podcast, more people get to listen to it. Hit the button, like, subscribe. Oh, I'm sorry. You don't like the podcast? I got an idea. Waste everyone else's time, increase your productivity relative to their productivity, thereby hit the button, subscribe. You like that or
I
no?
do like that.
I'm sold.
Yeah, I'm hitting like. I can assure you.
Oh my God, we just got one more subscriber.
All right, guys. We'll see you next week. We love you. And goodbye.
Bye.